All right, hello everybody. Welcome back into the NASDAQ Options Superstars program. Wanted to get a video out here today walking you through our new setup that we took here this afternoon. We'll also highlight some trades that are potentially coming into some zones here where we'll want to take some action, potentially taking some trades off over the next few days. So let's talk about the market in general here because it will shape how we're taking our trades. You guys have noticed we've been taking lots of credit spreads here lately, and I've talked through why that's been the case. We've been in a very indecisive market, a lot of back and forth movement. We're inside of a very defined range here. It's defined by the 200 period moving average on SPY down below us. That's held numerous times down around 284.79. And then we've got the 294 level up top. That level has held as resistance a few times. It's also right on top of the 50 period moving average. We are approaching that level again here for the second time in the last 3 trading sessions. Can we finally break up above that level? So far, anytime that we've tested these boundaries, we've seen reversals. We'll see if that happens again here going into tomorrow's session, or is this the time that we're going to break up above it and continue to see a push back up towards the highs, the all-time highs up at 302.23. There's a couple things that I'm concerned with here. If this market's going to break higher, ultimately price action's king. But when you take a look at the volume picture, here we are with 30 minutes to go in the session, and we've only had 32 million shares trade today. That's a fraction of what we saw back in late July and early August, where we were up well over 100 million shares. The volume is not confirming the move. The market doesn't need volume to move, but it is certainly a good sign. If you've got volume behind the move, that typically means that move's got some staying power. We are in this sideways consolidation, right? We're in this sideways pattern where there's been very little follow through, and that's really why we've been using more credit spreads, trying to get that time decay working in our favor. They aren't the most exciting trades in the world, right? They're not those home run profit potential type trades, but in this type of a market, taking what the market's giving us, we're just not getting the green light to get aggressive with those long calls, long puts. We could be getting close to that. We're just not getting a lot of that right now. We've got a lot of ugly looking chart patterns over the past 3-4 weeks. A lot of false breakouts in both directions. Now, we've talked about the coiled spring pattern in the past. What I mean by that is as a market gets sideways and choppy, and if it's a market like SPY that doesn't like to stay choppy for very long, as that spring gets tighter and tighter, we know that at some point that spring is going to pop and we're going to get a big move out of that sideways consolidation. Unfortunately, we don't know when that pop is going to come, nor do we know in which direction that pop is going to happen in. So that's the mode that we're in right now, just waiting for more of a trending type move to develop. I don't need a trend to happen for months on end, but if we can get, a trending type move into day 2, 3, 4, that would be more beneficial rather than just this back and forth every 24 hours. That's been a very, very difficult environment to be active in the last couple of weeks. There's just been very little movement on a day-to-day basis. Yet you have intraday moves for a couple of hours at a time, but they're just not translating into those multi-day moves that we really want to see as swing traders. So take that, what I just mentioned on the daily chart on SPY, that's helping to shape what our overall strategy is here in the near term. And then let's talk about ROKU. Because we did put on a new credit spread today. We sold a call spread on ROKU this afternoon and wanted to cover why it was a trade. ROKU has been one of the more impressive names in this market. It has been on a phenomenal move to the upside really the entire year. If I go back to that daily chart, I don't trade off the daily chart much, but it shows a great visual here. I mean, here's ROKU. If you go back, just over the past couple of months, going back to earnings back in May, you're talking about a move from the 70 range all the way up to almost 170 today. It's up almost $100 here just over the past couple of months. I am not saying the top is in on ROKU. We could very well move higher, but it's hard to argue with the fact that this thing is incredibly overbought in the near term. The pace on the upside here is not sustainable. Just look at the last couple of weeks on the upside. We've had very little selling to speak of at all, and it's up another 7.5% today on top of what we've seen the last few weeks. It's truly phenomenal. Well, if we go over to our charts, the 195-minute chart, we speed it up a little bit. you'll notice that the pulse indicator down at the bottom, it's that red and yellow histogram. We just now got our second yellow bar in a row. As of tomorrow morning, once we get into midday tomorrow morning, we'll get our third yellow bar in a row. What that indicates to us is that we're between a 1 and a 2 standard deviation channel move on the upside. It indicates we are at an overbought extreme. Again, it does not mean that Roku has to turn immediately. It just means from here on out, chances are we're probably going to see things slow down. We're probably going to see some consolidation, potentially even a reversal to the downside. By selling a call spread like we did today, that positions ourselves with a way to make money from either one of those scenarios. If we just chop, if we consolidate, great. If we reverse and head lower, great. We can work with that as well. We even have a little bit of a cushion up above us where we can be dead wrong on direction. We can work with that. The only move that hurts us here is a big move higher, which we're not expecting because it's already tremendously overbought. So we typically look for 3 out of the past 5 bars showing as yellow. Again, as of tomorrow morning, we'll have that third yellow bar, which is great. That's what we need for a setup. Now, let's go over to the trade page. And let me bring up the trade from earlier on Roku. We decided to utilize the September 20 monthly options. Those are the ones with 16 days left. It's a little bit shorter duration trade for us than what we typically look for. There's a couple of reasons why I went with the September monthlies. Number one, I wanted the liquidity in the monthly options. I wanted the good volume and open interest, which the monthly options have. You can see the open interest, the volume numbers well into the hundreds and thousands here. Makes it much easier for us to get fills at good prices. Most of you noticed this afternoon, you were getting pretty good fill prices and they were coming pretty quickly. We really didn't have any difficulty getting filled on the trade. So we used the monthly options. I didn't want to go all the way out to October. I didn't want to go out 44 days. That's just a little bit too far out for my taste, especially given the current conditions on Roku. So we went with the shorter term options with 16 days left. We went out to the 175 calls. We right-clicked on those, went to sell, and selected vertical. And it popped up an order down at the bottom. You can see it where I'm selling the 175 call and buying the 180 call at the same time. We were looking to get filled on this thing. I sent out in the alert earlier, I was looking to get filled at $1.55 or higher. It's trading for just over $1.70 right now. I got filled at $1.73 earlier. That $173 is the most I can make on the trade. That's my maximum profit potential. Whatever you sell that spread for to open up the trade, that is the most you can make on the position. We are risking $327 on this trade. Okay, we're typically looking for a trade where we're risking between 2 and 3 to make 1. That's a very normal situation for us with the credit spread. Because we collected $1.73, it puts my break-even point at $176.73. You can see that number in the order confirmation box. That number is calculated by taking the short strike, the 175 call that I'm selling. We're adding on the $1.73 that I collected to put the trade on, and that gives me the break-even. I don't care if Roku moves up, down, or sideways. As long as it stays below 176.73, I can make money. The only move that hurts me is a big move higher, which we're not expecting because it's already extremely overbought. I also make money from time decay adding up, so every day that passes, that helps us, and I make money from volatility decreasing if it does. So there are 5 different routes that we can take to make money on this position. Is it a home run profit potential? No. The most I can make is $173 per spread, but it does give us a lot of avenues to follow to make money. That's why I like these types of trades. In this type of an indecisive market, really like the credit spreads. And I'll record a video here on tomorrow highlighting some of our open positions because we've got some trades that are coming into play for us where we may be able to book some partial profits on them. I was hoping to cover it in this video here today, but I want to keep this video short. So I'll come back tomorrow and record a second video highlighting all of our open positions and what we're looking for over the next week or so. So on Roku, again, short call spread, it is a neutral to bearish position. We're looking for a period of consolidation or a pullback, and we'll continue to track this thing over the next 16 days. Our target zone, I should point this out, is 50 to 75% of whatever I collect to put the trade on. If you got filled for $1.73 like I did, that puts my target zone at 43 to 86 cents. What I mean when I say 50 to 75%, if I can close this thing out and keep between 50 and 75% of whatever I collected to to put the trade on, that's what I'm looking for. So right now I'm going to place a closing order at 43 cents and keep that working over the next 16 days to see if we can get filled there. All right. So if you have any questions on this new Roku trade, and actually before I wrap up, let me go ahead and pull up Tastyworks and we'll cover how to place the trade over there in that platform. All right, so I've got Tastyworks up here, and up at the top of the platform, I've got the symbol box, which I've already typed in Roku. I'm going to click on the trade tab here on this vertical toolbar towards the left side of the platform. That's going to bring me to the trade page. It shows me all of the expiration cycles that I have access to. I'm going to open up the September 20 monthly options. Those are the ones with 16 days left expiration. Go ahead and open those up. And I want to sell the out of the money call spread. So remember, we're selling the 175, 180 call spread. To sell the 175 call, I'm going to left click on the bid price of that 175 call. And in doing so, it's going to box it in red. I also want to buy the 180 call at the same time. So I'm going to left click on the 180, the ask price of the 180 call. That's going to box it in green. What that does for me is it creates the vertical spread down at the bottom where I can make some adjustments to it. You'll see the order summarized in the lower left-hand corner where I am selling. That's what the -1 stands for. I'm selling 175 call. STO stands for sell to open. And then I'm buying 180 call. BTO stands for buy to open. The price in the middle here, that is the price of the spread. I can arrow up or down to adjust the price as needed. I can change the quantity here by clicking on the left and right arrows. Right now it's set to -1 and 1, which we want, but if I wanted to increase the quantity, that's fine. You can just select however many spreads you want to trade here. Order type, this is a net credit. We want to sell this spread to open, so anytime that you're selling something, in this case we're selling the spread to open, it's going to be done for a net credit. Time in force, we're going to keep this as a day order. If it was a closing order, we could set this to a GTC or a good till cancel. We don't need to do that here. We're just going to keep it as a day order. Once everything is set the way that you want it, click on review and send, and that will go ahead and send off the order, which again, you should get filled pretty quickly. I've not heard any issues from people this afternoon trying to get filled on this trade and not being able to get a good fill price. So pretty liquid markets. It's not great volume market wide. Like we talked about on SPY, but on Roku, it's been a very active name, so I've had no difficulty getting fills there. Again, if you have any questions at all on the Roku trade, let me know. Go ahead and post a message inside of Slack. You can post a message inside of the NetPicks app or email me directly, mike@netpicks.com. So again, I'll be back tomorrow with another video highlighting all of our open positions. Take a look at what needs to be done on those here going forward. So I'm going to wrap this video up here. Enjoy your evening, everybody, and we'll talk to you here on Thursday for our next video.